strong rally today with the major US indices posting significant gains. The Dow Jones Industrial Average has surged by 601.41 points, that is 1.39%, reflecting renewed investor confidence. The S&P 500 and Nasdaq have also performed well, rising 1.59% and 1.63% respectively, driven by the positive statement in the technology and border market sectors. We can say that the Russell 2000, which tracks the smaller cap stock, has gained 1.09%, suggesting that the bullish momentum extends beyond large cap companies. Meanwhile, the VIX, often referred to the market's fear gauge, has dropped by 7.10%, indicating a reduction in market volatility and a shift towards a more risk-on sentiment among investors. In Canada, the stock market is also on the rise, with the S&P TSX Composite Index increasing by 1.06% and the S&P TSX 60 climbing 1.18%, driven by the strength in the key sectors such as agency and the financial competitiveness. However, latent all the Latin America market and the showing of the weakness, with the Brazil's Bovespa index dropping by 1.60%, that is 2,000 points rise. Mexico S&P BMV IPC declining by 0.54% and Chile's S&P IPSA falling by 0.82%. These declines suggest regional economic concern, possible currency fluctuation, or sector-specific challenges impacting the investor sentiment in the Latin America. The overall market performance highlights a clear divergence between North American and Latin American equities. While the US and Canadian markets are benefiting from the optimism potentially driven by the strong earning reports, economic data, or central bank policy expectations, Latin America indices are struggling. Investors may be reacting to the political uncertainty, inflationary pressure, or concern about the slower economic growth in the region. Moving forward, the market participants will likely watch key economic indicator and the global events to gauge whether this upward trend in the North America can be sustained, or if the volatility will be returning. The commodities market is experiencing mixed movement today, with energy and metals showing slight gains while the agricultural products and the natural gas struggle. WTI crude oil is up to 0.27% to $69.95, and the Brent crude oil is barely moving, up just 0.03% to $73.20. The small gain suggests a stable oil market, possibly influenced by supply and demand factors or geopolitical developments. Meanwhile, natural gas has dipped by 0.42% to reach $3.82, indicating some weakness in the energy sector, potentially due to lower seasonal demand or oversupply concerns. On the metal side, gold has gained 0.66% to reach at $2,867.30, while silver is also up 0.65% to reach $31.70. These increases suggest that investors may be turning to precious metal as a hedge against inflation or economic uncertainty. Gold in particular remains near higher at the end of the 52 weeks range, showing continued strength in the safe haven demand. In the agricultural sector, soya bean are seeing a minor decline, down 0.07 to $10, which could be driven by changing weather condition, global supply concern, or trade economic policy factors. Overall, the commodities market reflect a cautious optimism in the energy and metals, while the natural gas and agricultural products face slight downward pressure. Investors will likely closely watch upcoming economic data and geopolitical developments